Live streaming is on.
All right, good afternoon, everybody. Apologies for the late start. That was just me with a few small technical issues, but we are getting ready for the first edition in a couple weeks of the Options Playbook. Now, we are keeping an eye out on the broader markets here. Another strong day in equities as the S&P was able to push above the 4,400 level, got as high as about 44.20, 44.19 to be exact, at 12.15. And now we're getting a little bit of a rollover now. Right at 1 o'clock is when we saw that big drop. That is, of course, when that 3-year bond auction went off. I didn't see anything that was really jumping off the page to me. So we'll continue to monitor that. We're also waiting to hear from President Biden's comments on Israel. So, we're watching out on that front too for anything that could potentially impact the markets. But without any further ado, I am going to be calling in Brandon Mars, you know him better as options trader, to discuss. Our topic's going to be 0 days to expiration options today. I know that's been getting a lot of discussions, but also taking a look at some of his most recent trades. So, Brandon, how are you doing today?
I'm excellent, Gavin. How about yourself?
I can't complain. Can't complain. Just getting ready for earnings season to ramp up here. Definitely should be pretty interesting considering the September swoon that we had. I'm looking back, Brandon, in 2021, 2022, we had pretty much the same exact price action going into Q3. Q3 ended up being a bottom both those times, and then we were able to rally into the end of the year. So, kind of curious to see if we get some similar action here, but I'd love to hear what your take is on the market right now. I know you're following it closely and getting ready for earnings yourself.
Yeah, I mean, a lot of green out there, despite all the headlines and, like you said, bond auctions, inflation data coming up this week, earnings, and, a lot of potential things that could derail the market. And, it's looking pretty strong. Got a lot of green on my everyday watch list. So, like I said the other day in my notes, I don't want to ruin my career and try to call a market bottom, but Friday certainly felt that way. And I think the charts are looking pretty strong, and almost looks like we want to kind of make a run at the highs from the mid-September area for starters. So there's a lot of headlines that could potentially derail that pretty quickly. So I'm not going to go and bet the farm on it, but definitely leaning on the bullish side at the moment.
What would you say would be your top four charts that you like to follow for broader market reads? I know that's limiting somewhat, but I'd just be curious, like what's on Brandon's homepage when he starts off the day for just general thought process on the broader market.
Yeah, I mean, it's usually just the futures on the Nasdaq, the Dow, and the S&P. Those are really the main ones, and then I'll usually take a look at the 10-year yield when that headline comes into play of
Right.
us kind of moving in lockstep with it. So those are kind of the major ones, and then as I drill down, I've got kind of the Magnificent Seven and all my big tech stuff that I kind of take as a lead. Obviously, if we see Apple that's about to fall off a cliff, or Microsoft, then I might take a little bit of a grain of salt with the overall market. But I mean, those move so hand in hand with each other. But if I see something glaring on one of those, then I might take that into consideration.
Out of curiosity, what are you seeing in the Magnificent Seven these days? Is anything popping up to you on that group? I know you trade them pretty frequently.
Yeah, I mean, for the most part, they're all looking pretty strong. I mean, you got something like Google right now. I mean, I think that's about to be an all-time high, at least I think 52-week high today. Really liking the look of Tesla all of a sudden after today. Netflix is probably the one that's been lagging a little bit. But they're all starting to make their way off of or above the 20-day for the most part. Yeah, you got a stock like Meta. I mean, I would maybe be a little cautious since we're on day 4 or 5 or whatever of a move up. But that's starting to test the highs of the year. That could be a potential breakout candidate if we remain strong. So, I think things are looking pretty good at the moment.
All right, we'll be certainly circling around to take a look at some uh, at a tool that you could potentially use for trading these broader markets. But first, let's take a look at some of your recent trades here, Brandon, and kind of talk about what you were seeing in them. I know you've had a couple of real nice ones here, so want to follow up with you on them. And the first one that we're going to talk about is Boeing, ticker symbol BA, of course. Now you have covered your position in that, correct? So you're no longer involved. In fact, you don't have any current positions out there at this juncture, right?
That is correct. Yep.
So let's talk about that Boeing trade then. Stocks trading here at 193, up 2.8% on the session. Gotten a little bit of a bounce with the rest of the broader market here. So what was it that you liked about Boeing?
I mean, Boeing's just been in a very long, kind of steep downtrend, reaching that oversold area. Again, just because it's oversold doesn't mean it can't go down further. But I figured with some of the headlines in the Middle East, this is the largest holding in the, aerospace and defense ETF. So I figured just by default, it would get a little bounce yesterday. It really didn't. Guessing it had a little bit of a pull from the airlines too, that took a little bit of a beating from the higher oil prices, but just felt like it was kind of starting to try to break that trend line, had some catalysts. I think you had a trade in Delta, if I'm not mistaken. They have earnings this week. I just kind of saw some. Okay, perfect. So, I just kind of saw some catalysts out there being oversold, Middle East headlines, the Delta earnings that, might be an opportunity for it to break the trend line. And, started to do so yesterday, and then, seeing a real strong day today. And I haven't had a chance to read the numbers, but I think they came out with their delivery numbers today, and it did see a pop off of that. So I actually still like this to potentially test the 20-day. Just kind of looked like it was starting to stall a little bit. Market was up quite a bit, and I just didn't want to push it. I mean, I was up like 90% and 55% after the roll. So I just didn't want to get greedy, but definitely on my radar for the rest of the week.
All right. So this is one that you could jump back into then at any point this week.
Yeah, I mean, that's actually the one that's sitting right here in front of me that I'm still closely watching. I mean, at this point, it's moved 3% on the day. It's still looking pretty strong. I mean, it barely even pulled back on that quick little move at 1 o'clock. So could see some more upside, but at this point in the day, it might be fairly limited on how much upside is left. So just being cautious with that.
Okay, so in general, that's the reason why you took that off, because usually you would. So let me ask you this: if you had felt a little bit more comfortable about the market and this upward trend, that's something you would have rolled rather than just taking the profit and looking for another entry later on in the week. Would I be correct
Yeah,
in that assumption?
I was very, very tempted to roll it, and I feel like I might end up regretting it. But again, up collectively, 140% on the day. I'm not lacking confidence in this move. It just kind of started to hit a level, and it looked like it was slowing down a little bit. So I just kind of said to myself, hey, let's maybe take it off for now, and you can always re-enter.
And I just think that's prudent from a standpoint of how you're viewing this bounce. You like it, like you said, you're feeling bullish, but conviction's very difficult, right? It always is at the beginning of a bounce, I suppose. But I think that's important for people to understand that mindset going in, and the idea that banking 140% profit, no one's ever going to cry about that, right, Brandon? But maybe there's the potential that you could lament if this thing runs away from you here, but you're not going to worry too much about that, correct?
That's correct. And, like you said, I mean, it's been that downtrend has been really, really solid. There's got to be some sellers probably out there lurking in the shadows that have been underwater and seeing this bounce to get out. So yeah, just being a little bit mindful of that. And then, with that 20-day that's kind of floating a couple points above the current price, definitely mindful that that could be a resistance level after that downtrend.
Yeah, it's funny because speaking of 20 and resistance levels, I was looking at that for the S&P and the Nasdaq, and that certainly didn't hold up for resistance in either one of those. So I'll be curious to see what happens with Boeing. What's your ideal setup here, Brandon, for getting back into it?
If it kind of just floats along where it is now, I mean, love maybe tomorrow if it got some sort of gap down, you find some sort of, hammer candle on high volume in the first 15 minutes or so. Would love to be able to jump back in and, make a play for it to potentially test the 20-day. That would be ideal, but, who knows what's going to happen with still 2 hours of trading to go.
Yeah, exactly. All right, another nice trade you had out there is Tesla, which is moved above its 20-day moving average today, which we got sitting here right around that 257 level. Stock rallied up to 268. It sits pulled back about 5 points to that 263 area. So, what was Tesla showing that really got you enticed to jump in on that trade?
Yeah, so if you look at the daily chart on October 4th, you had a really nice candle on it. I mean, there were a lot of nice candles. That was the day that we had a nice surge higher. And then the last couple of days, it's just been kind of hanging out above that 20-day moving average that you mentioned and kind of sitting around the highs, or excuse me, the close of that move higher on the 4th. And it just kind of saw it this morning, and it felt like one of those days where you might get a little bit of a run here in the market, and some decent volume came in the first couple of candles, and it was really strong. So just kind of said to myself, you see some of those tech stocks in this environment, and they just get some great momentum at the open. So just kind of jumped on it, and unfortunately got out a little early. I usually don't take trades that quickly into the day. I just kind of had a hunch when I saw the volume coming into Tesla. So I just didn't want to push it. Decent little trade. And, I think as long as it doesn't pull back too much here in the afternoon today, if we see any profit taking, I would imagine this might have some room to run.
All right. So again, another one that you're looking at, possibly another re-entry in it.
Yeah, that and Boeing will probably be on my list for the remainder of the week.
Okay.
Barring any, major changes or headlines.
All right, let's pivot then to two names that were on your list yet. You didn't fire on them, but Okta's cybersecurity play, another one that's having a nice little push above the 20-day moving average here. Bounce off the 200-day moving average. These cybersecurity stocks, I was talking about them at the end of last week. They just set up nicely, Brandon, right? I mean, I was looking at those Clorox headlines and I was just kind of scratching my head that they were selling off while everyone was talking about how much money Clorox was losing because of the cybersecurity attacks. To me, it just seemed like, if you needed any confirmation on why people need to spend money on these plays, here you go. So looking for strong fundamentals in the Q3 earnings season, which we got coming up underway. But what was it in Okta that had it on your radar? And is there any particular reason why you didn't fire on it?
Yeah. So, if you look at it, I mean, it did have some nice earnings, and it's had kind of a little bit of an orderly pullback since then. And then on Friday, just had a huge candle, almost no wick at the top or bottom, which is something you always want to see if you're bullish. Took out the previous 3 days, had almost like a flag-like pattern on the weekly chart, and ended last week with a hammer candle. So just seemed like the bottom of it might be in. This one doesn't always trade a ton of options. So right out of the gate, there just wasn't a whole lot there. And it took off so quick. And, at the same time, I mean, it had some more headwinds with things like you said, and, unfortunately stuff in the Middle East again, I think is probably giving a little bit of a boost to cybersecurity as we see more threats. But at the same time, I just didn't know if I wanted to jump in with a bunch of calls because, I wanted to kind of see, you got bonds, and bonds were closed, but you've got, the dollar and oil and then, futures all whipping around. I just didn't want to jump into calls at, 9:31 in the morning. And this thing just took off and it really hasn't turned back. I mean, real solid 3-day run. At this point, I'd probably want to see it take a little bit of a breather, but I got to imagine it's got some room to run in the future.
Let me ask you then about that, because I know I have been burned plenty of times by jumping in on the first 15 minutes of trade. So I usually kind of like to let things play out a little bit. And that also includes, if there's a 10 a.m. big econ data point, I'll usually wait for that to pass by. Is there any particular reason or any thought process that you have going into the start? Like you said, you didn't really want to start firing on calls at 9:31. Is that typical, or did that just kind of happen to be the mood of the morning? How do you approach the opening of trade?
Yeah, I mean, these days I do less and less in the first 30 minutes. And, I miss opportunities all the time. I mean, frankly, like if you hop onto calls and, you get some of these moves of 2-3% higher in the first 30 minutes. I mean, you can make huge money. So, don't let my personal thoughts stop you by any means. But yeah, just getting whipped around so much. And I mean, especially you're entering into a Monday with, all the headlines in the Middle East. I just wanted to take some caution, and I thought there'd be plenty of opportunities elsewhere throughout the day, and just didn't want to risk it. But yeah, these days I trade less and less in the first 30, and it's just made my life less stressful. So I've enjoyed it.
Yeah, you definitely miss out on some of the volatility, like you say, and also, maybe you'll miss out on a big home run hit or two, but you're also not going to get just creamed with a quick 2-3 point loss or something like that popping in either, I find. So no, that's interesting to hear, because everybody's got a different approach to that open. So I just like hearing what other people are looking at there.
Yeah, I mean, I
And
know
then
guys that only trade the first 30 and then they call it a day. And if that's what you're good at, it's like we talk about a lot on this call and just in the room in general. It's just kind of know thyself as a trader. And it's just worked a little better for me lately. So I've just kind of stuck with it. But I mean, I got my dad has a buddy who's retired and he works the first 30 minutes. He tries to make a couple grand and then he goes fishing every day. So there's plenty of money to be made.
yeah. I mean, it just all depends on what you're comfortable with, like you said, right? So now another name that you had
Exactly.
on your radar was Advanced Micro Devices, AMD. Watching the semis, semis are definitely one of the better charts that I've seen out there, Brandon. I don't know if on a sector-wide basis if you've been following that closely, but the SMH definitely seems to be shaping up as a potential leadership into the end of the year. And this AMD chart, this looks pretty nice, but again, another one that's ripped above the 20-day moving average. This is actually edging up above the 50-day. Was this just too simply overextended for you to chase? What was your reasoning for not getting involved with AMD?
Yeah, AMD is kind of one I think if you've traded it enough, it can tend to annoy you, I think.
Yeah.
It's just kind of been one of my experiences. So that's one in particular that I don't like to jump on in the first 30 minutes. And at that point I was kind of watching my Boeing trade and my Tesla trade, and all of a sudden it had moved, and then there was some news out on it, and I just had kind of missed my opportunity. Now, with that said, on the daily chart there, I mean, this is breaking out of a pretty defined channel dating back to like mid-June. So, in theory, again, barring any headlines or, stuff like that, this would probably have some run to run, especially if it can get above that 110 level. So, this has probably got some gas left in the tank, but I just missed it today, unfortunately. But would imagine at this point it's at 109. You got to imagine it's probably going to test 110 sooner rather than later. So it could be a nice, quick little trade.
So this, as well as Boeing and Tesla, are going to remain on your radar, then, I assume.
Yeah, I would say that AMD is definitely, and the semis in general. They had a little bit of an off day yesterday, despite the market moving up. I mean, if the Nasdaq wants to keep climbing higher, you got to imagine that the semiconductors have to pitch in and help it kind of get its next leg up. You would think.
Yeah, no, I'd agree with that. All right. So, any other trades that you just want to highlight out there, Brandon, or have we covered all the bases from this week's action?
Yeah, no, I think that's perfect on trades for now. And then, of course, like every day, I'll have some new ideas once I do my homework tonight.
All right, we'll be looking for them. So let's move on then to this week's topic. And I know it's definitely something that's been pretty interesting in the market, certainly a relatively new phenomenon. I'm not sure how long they've been around, but these 0 days to expiration options. A lot of day traders have been using them in lieu of futures. So I know it's something that you haven't traded a lot, but you definitely have a curiosity out there like the rest of us. So, why don't you talk a little bit about some of the things that you've seen in your experience with these 0 days to expiration options?
Yeah, so zero DTE or 0 days to expiration options. I mean, the most basic form, I mean, they're just options. They work the exact same as any other option. It's just the difference is they happen to expire in that same day. So you have very little time until your expiration. Your premium would lose quickly on a trade if it goes against you. On the flip side, your premium could spike quite quickly if a trade goes for you. So because of this short term time frame, you will have a tendency to find some pretty intense price swings, especially if you're getting in the money, getting very close to the end of the day. I mean, they're going to move hand in hand with the indexes. So, it can get a little volatile at times. But the
Is this
attraction to
some?
them is
Is this a lottery pick for you at all, ever?
so, well, my comments on whether this is a lotto is, a lot of the articles that are popping up these days call them lottos. They said everybody's gambling on the 0 dated options. So for me, I kind of treat them as that, where I might kind of lighten up my allocation size a little bit. But my thought on whether they're lottos is, if you enter into the day and you just say, all right, I'm going to go ahead and I'm going to buy some sort of QQQ call that cost me a penny. Okay, I'm not saying that that's not going to work. In certain days, you would absolutely kill it on that, but that doesn't seem like an exact plan. Now, if you come into today and you say, oh, all right, well, I think the market's oversold, and I'm just making up a scenario here. I'm not saying these are my actual thoughts, but if you came in today and you were like, all right, I think that the market's oversold and I think that we're going to get a gap down and it's going to hit, this major moving average and we're going to see a nice bounce of, 3 to 4 points, and you go and pick a strike, based upon how many points you think it's going to move. I think that that's a well executed, again, if it works out, but it's a well thought out plan. And I don't see that as a lotto per se, but just going and blindly buying these options because they're cheaper and they expire in that day and you think you're going to hit a home run. Well, that I would call a lotto for sure.
Right. Well, I'm just going kind of the mindset that I know you like doing the Friday lotto picks just before options expiration, just looking for those quick hitters. Um, is there ever a time where you're like, well, I don't really see any charts that I like, but I do think that the market's going to go up here, at where you would pivot to this?
Yeah, I mean, that's mainly and it's been few and far between. But the couple of trades that I've recommended on the QQQ and the SPY, those have been times where I've just said, you know what, I can't find a particular stock that I love that I think is going to break out, but I do think the market's going to move. That's usually where you see that kind of recommendation from me.
All right. Now, in your travels, have you seen this primarily being used by retail or institutional?
So it really started out with kind of the Reddit crowd, from what I've read, and it's starting to be embraced by the institutions. Now, not going to say that institutions weren't doing this before, but yeah, it seems to be increasingly used by the institutions, which, I think is a good thing and a bad thing. Creates some liquidity, but also probably creates some more games for us on the retail side.
Yeah, it would seem like if a big institutional buyer's in there, there's that potential for a little bit of a Red Sea where people jump in and all of a sudden it parts on them and they just fall flat on their face, I would think, right? A little bit of volume misinterpretation, perhaps.
Yeah, no, I would agree. And the institutions, I mean, if you're talking doing some of these SPY or QQQs on an intraday basis, they can put some serious firepower behind that. So, it can be one of the reasons that we would maybe either see some more volatility or things such as pinning. So yeah, I mean, the institutions stepping in, they can definitely sway some things and maybe make our lives a little bit more difficult while they're creating some increased liquidity.
All right. With how quickly the premiums can move against you or for you, um, is there anything in terms of a risk parameter that you would see would make sense for these plays here? Like, is this something where you're like, well, I'm going to put 300, $400 worth into it and I could lose this in 2 minutes, but I'm fine with that. Like, how do you manage the risk in this given how quickly the premium can move against you?
Yeah, I mean, I probably would go in with the mentality of if I'm right, great, and if I'm wrong, then I'm out of my money, just because it can move so quickly. So yeah, I definitely go into it thinking, hey, worst case, this is my biggest loss, is my premium paid. As far as on the risk standpoint too. Yeah, I might be a little bit more inclined to stay closer to the money. Obviously, like right now, what's the QQQ trading at? 369. I mean, I don't know. Maybe we get some good news out of the Middle East, and all of a sudden it soars to 380. I'm really making that up, but yeah, I'm probably not going to want to go and buy the 380 call at 2 o'clock in the afternoon today. So I'm probably a little bit more inclined to stay a little bit closer to the money, and then taking profits usually a little bit quicker, because if you do hit a breakout on one of these at the right time, I mean, you could easily be up 100, 200% on your money in, 15, 20 minutes. So, making sure that you at least maybe get a little bit of your capital and maybe some profit off the table.
No, that makes sense. What kind of scenario do you like? What would be some of the patterns that you'd be looking at that would entice you to do this? Now, I know I'd be curious. Do you have plans? I know you don't really trade these. Do you have plans now that you've kind of dug a little bit deeper into it to using them?
I mean, I love my Friday zero dated options on the lotto front. I definitely love those. For me with the SPY and the QQQ, I do think there's some great opportunities for them. I just feel like the last couple times that I've traded them, I've felt a little pigeonholed, where I've been like, all right, I've got a QQQ call open, and that felt like my exposure to the tech world. And I felt like in certain times I'd pass up opportunities on some other good chart patterns that I saw, just because I felt like I already had my play there. So that's one thing that I've kind of been working on, mentally and just my plan wise. But yeah, no, I think like you and I have talked about that, we should maybe try to start getting a few more of these ideas out there on a regular basis.
Yeah, no, I'd be definitely happy to work with you on that. I generally trade the futures, but futures for me can definitely, if I was to have one issue with the futures, it's my timing could certainly be off on them. That would be my weakest point of it. I usually get the direction right, but sometimes I'll get cut out and have my risk a little too tight. I feel like I could have a little bit more of an expanded risk with the zero dated options. So, it's something that I definitely want to continue to look at. What would be some of the patterns that you'd be looking at on a daily basis for this that would entice you to use this, Brandon?
Um, yeah, and just going back to your comment real quick, um, the timing on these zero dated options too can get a little tricky because you are getting so close to expiration, and especially if you start doing them in the afternoon, if you're off by a candle or two, that can definitely hurt the P&L. So they definitely are still fairly challenging, but I definitely get what you're saying with maybe having a little bit more leeway. So probably looking at, like, let's take a look at the QQQ or the NASDAQ futures, whichever one, because they're kind of one and the same. If you're looking at it on an intraday basis, and I'm personally looking at the 5-minute chart right now, we had that really big sell-off there. And then all of a sudden you kind of have that like hammer candle at 115. That was kind of a ugly sell-off, and that was on some pretty high volume. So I was definitely a little bit nervous that we might still see some more downside. But things have been pretty strong, and we got that bounce. And in that particular case, you got the 20-day intraday sitting at 369 and a half. Seeing a nice little bounce after that sell-off of some dip buyers jumping in. You might get that nice point, maybe 2-point bounce. That would be a kind of a decent scenario to maybe pick up the 369 or the 370 call. So yeah, some sort of setup like that is what would intrigue me. Or the other thing is, if you think you're going to come in today and you're going to run like we did in the morning, again, take it with a grain of salt because you're trading in the first 30. But making a trade on the 370 QQQ call entering into the day would have been a really nice trade, that's for sure. And you could have managed that, you could have rolled it, and you probably would have made some pretty good money if you took that trade.
Do you find it as a good hedging instrument? For instance, say you've got a lot of longs out there, and you just are starting to feel that we're going to run into some resistance, could get a little bit of a pullback, but I don't want to take any of my positions off, but I don't really want to give up any of my profits either. Would you use this as a hedging option?
I mean, if you bought like the 368, 369 puts on the QQQ before that drop, yeah, that would have been a great hedge. I mean, problem is that if you're using that as a hedge, because they're moving so quickly and it's intraday, I mean, your premiums and stuff and your hedges are going to swing quite a bit. But, if you're okay with the fact that it is a hedge, and hedges, don't always necessarily make money, that's why they're there. Yeah, I mean, that could be a very good hedge, especially if you had kind of loaded up on some tech stuff in the last couple of days. You would have made a nice little return if you had used the put as a hedge today. That's for sure.
Yeah. All right. You did have a couple of real world examples. Do you want to just kind of run through some of those? For instance, what would have occurred last Wednesday, just so people kind of get an idea of what kind of payouts you're talking about and risk.
Yeah. So I want to maybe preface this comment as far as the payouts go, where this is a pretty nice payout, and maybe don't expect this every time. But,
Right.
I mainly wanted to point these out too, to kind of show the potential roller coaster that you go on. So last Wednesday, when the NASDAQ surged over 1%, You could have bought the QQQ 360 call for a low of 2 cents at one point during the day. And during that afternoon surge, you could have sold it for 72 cents at 3:35 in the afternoon. Now, once the afternoon profit taking kicked in, that 72 cents was worthless by 4 o'clock. On the flip side, if you entered into the day and you wanted to play the small fade that we got after the morning gap up, and you had bought the 355 put at 9:35, you could have doubled your money by 10:30, and then basically by lunch, that contract was worthless. So it's kind of my long-winded way of saying it can be very much be a roller coaster, and just protect yourself and your profits. Just I would say get at least some profits off of the table. Initial capital, then profits. Because if you had gone from 72 or 2 cents to 72 cents, so you're talking, a 30x. And that went away in 25 minutes, you are not going to be happy that evening. So just keep that in mind, that they do take you on a little bit of a roller coaster sometimes.
Okay. That's to your point about how quickly those premiums can move against you and everything as well, too, right? So,
Yeah, absolutely.
just kind of taking a look at this. Now, are retail, you said they're pretty heavily involved with it. Are they underwriting a lot of these contracts?
Yeah, so I haven't read much about that, and I haven't personally talked to any traders that are doing it. I'm sure that there are people out there doing it and maybe potentially interested in it. So I just kind of wanted to give maybe another real world example to show the potential risks. So going back to last Wednesday. So let's say you were the call writer and you wrote those 360 calls for 2 cents. If you wrote 100 contracts, so again, just to keep in mind how big of a trade that would be, you'd be talking about $3.6 million in underlying notional value. You'd only collect $200 in premium because you're only picking up that 2 cents. Now, if you had to buy that back when it hit the 72, and again, you didn't necessarily have to because it eventually became worthless and you would have kept your $200. But if it was about to close at that level, you would have had to either have 3.6 million floating around, or you would have had to close that out. It would have cost you $7,200 to buy back those contracts. So you would have been sitting on a $7,000 loss on potentially $3.6 million worth of underlying QQQ. So again, just there's money to be made on writing options. We've talked about it before. Just again, just be careful with the size and the scale, and make sure that they're managed.
Liquidity is not an issue with these, right?
So I want to maybe go back to one quick point here. As far as liquidity goes, the only ones that I've really looked at are the SPY in the QQQ. And there they have great liquidity. There's lots of volume. There's tight spreads. And you have a call and a put that you can pick from in increments of 1 point. So no pun intended, a lot of options there. The other securities that trade these one-dated options on a daily basis, and then again, anything you do on a Friday would be considered a zero-dated, is the NDX, which is the NASDAQ 100, the S&P 500, the SPX, or the mini SPX, which is the XSP. And I will be completely honest with you, I have never looked at any of those for trading options. I looked at them briefly. Some of them looked pretty thinly traded, but I'm not the expert on those. But on the SPY and the QQQ, yes, you're going to have plenty of liquidity.
All right. Let's see. Anything else that we've missed here, Brandon, that needs to be discussed on this?
Just I guess my warning on these, I think I mentioned it once already, but I'll just say it again. So again, we'll look back to last Wednesday. So at the time that I was looking at this, the at the money QQQ contracts were about $1. Obviously, those 2-cent ones were pretty far out of the money at the time. So if you did $1,000 investment, you'd get 10 contracts, which at the time would have been about 360,000 in underlying QQQ. And if you went just a couple strikes out of the money, you could have bought double the contracts for the same amount, and that would have been about 720,000 in underlying value. So kind of like I said before, just my warning, just make sure you close those out. I think your brokers would probably do it if you're sitting in the money and you didn't have the money in your account available, but a 720,000 margin call for a bunch of QQQ shares is quite a hefty bill in the morning.
Yes. Yeah. Again, it points to the risk that's associated with these. So, what do you think's the least riskiest way to play this? Then, just kind of making sure you're just buying it, not underwriting anything, basically.
For me, I mean, I personally wouldn't want to underwrite them because, I mean, again, you can make good money writing options. So I'm not knocking the strategy at all. It's not for me personally. I just personally don't like the risk return of collecting $200 for having that kind of underlying notional value. So yeah, I mean, the path of, I mean, anytime you write an option, especially if you did it naked, which I don't even know if the brokers actually let you do that on a zero dated option, just because they've had some problems with those. But yeah, if you're writing an option, especially naked, there's a lot of risk to that. So just for me, I'm a call buyer and put buyer. That's just what I feel comfortable with, and that's personally how I'd play it. But again, not knocking the strategy if you write them.
Yeah, for sure. All right, Brandon. Anything else on the 0 days to expiration?
No, I think we hit every point on the list here.
Let me just do a quick look through here. Yeah, I think we got all the feedback questions. Somebody's asking about average trade size for zero days to expiration. Any thoughts on that? I mean, obviously, it all depends on what the user is comfortable with. But is there any thought process that you have, like in terms of percentage of your portfolio, or is this simply just I don't want to call it fun money, but just money that you're not going to miss if you lose it?
Yeah, I mean, for me, usually I'm never over 1% of my portfolio with any options trade. For a lotto, I'd probably be taking a half size position. I mean, most of my options trades are all going to be the exact same size. The only time I ever really reduce that is when sometimes if I take some risk overnight, or if I'm doing a zero dated, Friday lotto. Every so often I'll go a full size if I think it's, a real good setup, or, maybe one of those days like Friday where just the market was really strong and you could kind of tell that we were going to run. And then sometimes too, what I might do is on the note of fun money is, let's say you do take like a Friday morning trade in the first 30 minutes and all of a sudden that thing just rockets and you're up 100, 200%. One of the ways that, it might produce a little, or try to produce a little alpha in the account, is put aside all my initial capital, put aside some profits, and then take a portion of money that is fun money, where I say, you know what, if 4:00 on Friday hits and this particular chunk of profits is gone, I don't care. It's not going to ruin my weekend. Then I might try to put my foot on the gas with a smaller size, maybe take on some more risk. And, again, I'm not going to just do it blindly, but if I thought that the market was really going to run, maybe you take a couple $100 or whatever percentage of the profits and, maybe buy a further out of the money, call option, and try to hit that home run. But again, I only do that with a portion of money that I basically don't care about.
All right. I think that covers all our bases then, Brandon. Any parting shots here before we let you go?
No, I think just the main thing, and I touched upon it earlier, is you just have a plan. Like any trade, every time any trader enters into a long, a short, a stock, an option, you do your analysis, but there is always that chance that it's going to work against you. So, having a zero dated option work against you, it's just part of trading. Just have your plan ready. Just don't go into it blindly thinking that you're just going to, pay off your mortgage. And people have done that. So anyone that thinks I'm crazy out there for saying that's had that happen to them, well, congrats. But, I just think just don't go into it thinking, hey, I'm just going to buy this short dated option and it's going to, make my day. Just go in with a plan and do your plan and stick to it.
All right. Well, with that, we will close up this discussion. It's good getting back on with you, Brandon. I know it's been a few weeks with my travel schedule and everything like that. So happy that we were able to get this started back up just in time for earnings season. So I'm sure we'll have plenty to talk about in the next coming weeks. So thank you very much. And, I'll talk with you on the side too about this, about trying to get more of these plays out there for people so we can kind of get it into practice and see exactly how it can unfold for us and hopefully make some decent money, pay off that mortgage eventually, right, Brandon? Maybe not in the first trade, but in a couple of years of activity, right?
Your words. If anyone doesn't pay off their mortgage, it's your fault.
Fair enough. Well, that's the goal for everybody here, right? So
Yep.
they wouldn't be listening to us otherwise. So, all right, my man, you take care of yourself. We'll talk to you soon enough. Looking forward to seeing some more of your fantastic trades out there on the site. And we're just going to shut down audio here temporarily. And we'll be back up and running. Take a look at the broader market. Still waiting for comments from President Biden on Israel here. So we'll see if that has any sort of impact on the markets. But I will give the alert when we are back up and running here. So, Brandon, you take care of yourself, my friend, and everybody else.
Thanks,
will talk
Kevin.
to you in just a couple minutes.